Good afternoon, everyone. This is Coach Mike with the Baltimore Stock Market Meetup Group. This is the February meeting. We did not have one in January, and I apologize. I was traveling on vacation down in Nashville. I spent New Year's Eve and New Year's Day in Nashville, so traveling back, I was too exhausted to do the January meeting, so I apologize. But I'm here for the February one. I had to re-record this actually. Didn't turn out right the first time, so I'm doing a re-record for the February meeting. For those of you that are already familiar, we meet the first Tuesday of every month at 7 p.m. It is a virtual meeting for now. However, back in December, we did have a in-person meetup in Catonsville, and I had a really, really good time. So looking forward to doing more of those because it's something different about the energy in the room when you're in person versus just virtual. And I got a chance to meet a lot of people that I've been seeing on screen, but I never met in person. So that was awesome. So if you got some ideas, if you're in the Baltimore area and you got some ideas about locations for the next meeting, definitely let me know. So here's a snapshot of the meetup. It was a small group, about 7 or 8 of us. I think there was 1 or 2 people missing from the picture, but had a great time meeting everyone. So this is from the December meeting out in Catonsville. Want to let you know, quick update, that on the Meetup website, there is a donation button if you'd like to make a quick donation, small donation of any amount that we can use to go towards the food and meals and location for the next meetup. So feel free to make a donation to the group. Thank you very much. I appreciate it. So for those of you who don't know, I am your host, Coach Mike, founder and CEO of Walk On Consultants, where I help people learn how to get started in investing. You've been sitting on the sidelines, wanting to get into it, and you see everyone else having fun. I'm your guy. I teach people how to get started in investing and also counsel people who already know how to invest, but they need someone to bounce an idea off of from time to time. So feel free to book a 15-minute appointment, no strings attached, just a chance for us to get to know each other. So I always start my meetings off the same way. I always like to say that an investment in knowledge pays the best interest, and I want to thank Benjamin Franklin for that awesome quote. It's one of my favorites. So my theme for this month, and actually for the year of 2022, there was no place to hide. As you can see, the S&P was down 19.4%, the Dow down 8.8%, NASDAQ down 33.6%. It was a brutal year, especially for new investors. You know, it's your first time investing. I do have one client I'm working with. She's new to investing, and it's in a rough year to learn how to invest. So no place to hide. Sorry for that if you're just new to investing. These are some of the faces that you'll see for people who just got started. If you're an experienced investor, you should be used to some of this. But if it's your first time, I can imagine that it is a really, really rough time, an expensive lesson for the first-time investors. So I'd like to remind you, please don't panic, right? Please don't panic. Rule number 1, don't panic. This is a headline from the newspapers of 1929 crash. And I know some of you are saying, what's the newspaper? Yeah, these are things we used to read back in the day, but don't panic, okay? Don't panic. This happens. It doesn't always just go up, okay? It goes down sometimes, all right? So for the people that have been following along with me, towards the end of 2021, right around Black Friday, right after Thanksgiving and Black Friday and then Christmas shopping, I was already getting nervous because I knew that we had 3 really good years in a row. And I was getting nervous about 2022. And I was like, I'm starting to make some changes in my portfolio into some more defensive type stocks. So I'm not saying I have a crystal ball and I knew it was going to happen, but I was saying that, hey, I'm asking a question. What do you think is going to happen in 2022? I'm just not so sure. And that one of those reasons is because it's not my first rodeo, right? I looked at history and I saw what happened when you had 3 good years in a row. And sometimes that 4th year, it's no guarantee. So I was sort of bracing myself and bracing my portfolio for what might come ahead. And this is kind of the feeling I had, like we've been on a roll, but you know nothing lasts forever. So I was just being cautious going into 2022. So I wasn't shocked at all when I saw what happened in 2022. Again, you got 3 great years, and I mean great years. Keep in mind that averages are between 8 and 10% a year. So if you got a 28%, a 16, followed by another 26% return, I mean, what do you think is going to happen? The party's got to end at some time, right? And you knew that the Fed's was going to start raising rates. So, hey, we took a loss. So you hear me preach diversification, diversification, diversification. You got to have a diversified portfolio. And what I have here on the right are the percentages that each sector makes up of the S&P 500, not the return. And I just want to make sure, I'm sure a lot of you already know what I'm talking about, but don't think this is the return that it had. This is the percentage of the pie that it makes up. And I always preach diversification. Unfortunately, in 2022, no matter how diversified you were, it was really no place to hide. Almost every sector was down except one, okay? So if you were diversified, it's a good thing, but diversification probably didn't help you that much, okay? Case in point, the energy sector was the only sector that was up. Everything else was down. No sector even gained 1%. Everything was down. So unless you shifted everything into energy stocks, you probably took a loss. Maybe not 19%, maybe it was 20, maybe it was 15, but unless you put everything into energy, you probably lost money. So let's take a look at some of the winners, right? Right at the top, Occidental Petroleum up 122%. And if you're in Baltimore, you know who BG&E is, but their parent company is actually called Constellation Energy. So there were chances to double your money in 2022. You just had to be in the energy sector, right? Going down the list, you see all of them are oil and gas services. Even First Solar is a solar company, but everything on the list was energy. I got into Occidental Petroleum a little bit late to the party, so I didn't get a chance to double my money, but I was up maybe 10 to 12% at the end of the year. Let's take a look at some of the losers. Now, trust me when I tell you that there were some bigger losers. There were some stocks that were down 70, 80, 90%. I picked just the ones that I knew you would know their names, right? So some of the popular stocks among individual investors. You got Tesla, Meta, Facebook. Yeah, it's called Meta now. I'm sorry, right? PayPal, Netflix, Nvidia, Amazon, and so on, right? Now, one of my clients asked me about Amazon. During the year, Amazon had a split. Should I buy Amazon? And I'm like, guys, just because the stock's splitting, that's not the reason to buy a stock. I don't know how many times I have to say that. A split is not the reason you buy the stock, okay? So look, even a company like Amazon down 49.6%, okay? Disney down 43.9, almost 44%, and you Apple lovers down almost 27%. But let me go back to the top of the list with Tesla. Tesla, I feel like there are three reasons that Tesla was down big. One, he was distracted by trying to buy Twitter. Two, he had to sell some of his stock in order to buy Twitter, right? He kept saying he's not going to sell stock. Well, he had to sell stock. If you got more sellers than buyers, that puts pressure on the stock. And number three, remember this guy runs Tesla, runs Twitter, and runs SpaceX. And actually, I'm going to add a fourth one. There's much more competition. The same reason that Netflix suffered. At one point, Tesla was the only really, reputable EV maker out there. Now everybody's jumping into the EV market the same way everybody's jumping into streaming. So Netflix and Tesla had a lot more competition than they used to have. So that put a lot of pressure on the stock. So I know we talked about how much the markets were down, but I wanted to show it in chart form for two reasons, just to really give you a visual on the bounces and the ebbs and flows of the market. Again, the Dow was down 8.8, S&P down 19.4, and the NASDAQ down 33.6. But I put it in chart form to show you that throughout the year, you kept getting these false hopes of, oh, it's going to come back. Oh, it's going to come back. And then you were disappointed. And some of you have been following this strategy of buying the dip, right? Should I buy the dip or should I sell the rally? Big question. When do you buy the dip? When do you sell the rally? Okay. Because some of you is like, oh, they said buy the dip and you bought the dip and it didn't work, right? Why didn't it work, right? This is what happened with Bitcoin on its monster run from $10,000 to 65. I think it topped out at maybe 68,000. And right now in 2022 and going to 2023, it's around 20,000, right? Buying the dip worked, right? So why didn't the buying the dip work this time? Okay, here's the reason. In a bull market, yes, buying the dip works. And as you saw in the previous chart with Bitcoin, it was in a bull market, you buy the dip, it goes back up, right? In a bear market, you want to sell the rally. Well, how do you know the difference, right? And that's getting into a little bit of technical analysis here. But, if a 20% fall in the market from the high, then we're in a bear market. I also look at moving averages, the 50 crossing the 200, what we call the death cross versus the golden cross. If the 50 crosses the 200 on the way up, So now I'm not probably losing a lot of people who just got started investing, right? But I got to point this out that you don't always just buy the dip because we're not always in a bull market. Typically, bull markets last around 7 years and bear markets last about a year to 18 months. So you got to be cognizant of the greater, broader market in addition to what's going on in your particular stock. You got to be aware of the overall market. So right now in 2023, I think the market's pretty much kind of flat. It was clearly a bear market in 2022. 2023 probably going to be a flat to a minimal gain this year. So I would kind of be staying put and maybe just sticking to dividend paying stocks, defensive stocks, and nibbling at some of the growth stocks. So far for the month of January, great month so far, right? And there's a theory that if the first month of the year is good, then the rest of the year will be good. I don't know if this is going to be one of those years, but that's the theory that's out there. So great start to the month. But remember, the S&P being up 6.2% in January is recovering from an 8.8% loss in the whole year of 2022. The Dow being up 2.9 in 1 month is recovering from an 8.8% loss in the full year. And of course, the NASDAQ being up 12.9 is recovering from a 33% loss in the previous year. I misspoke on the S&P. The S&P was down 19.4 in 2022. So gaining 6 is just gaining back some of the losses. So keep that in mind that, yeah, it was a great month, but it was a big loss from 2022. So, but the theory is if we've got a good January, we'll have a good year. We'll see. None of us have a crystal ball. So what do I think? What are my expectations for 2023? I think the Fed's going to keep raising rates. And of course, that's going to make it harder to buy a house because think about the difference between getting that mortgage on a $300,000 house or $400,000 house. When rates were at 3%, now they're at 6%. That's a lot more. It's a lot harder to afford that mortgage payment when rates have doubled. Okay. And if you're a business and you need to expand and buy new equipment or hire more people, you're probably going to be laying people off and delaying the purchase of new equipment. And the end of Tina and the beginning of Tia, no, they're not two girls I used to date. It's a theory of there is no alternative. For about a decade, investors didn't have an alternative. Rates were simply too low to invest in bonds or CDs or anything else that paid a fixed rate of return. Now investors have an option. Okay, you can get a CD for 4%. You can get a bond 4%, 4.5%, 5%. Okay, now you got an alternative. And what I mean is, why risk getting an 8 to 10% return on your money and taking that risk versus getting a guaranteed rate or rate of return of 4 to 5%? For the conservative investors, that's a trade-off they're willing to take. They'll take the guaranteed 4 or 5 versus risking their money in 8 to 10. For some of you more I guess, aggressive investors, that's not enough. But now we've got a balance. Now it's like, do I take the 4%? Do I risk it for 8%? So at the bottom, I put there's a small chance, with China. I don't think there'll be a war, but there'll be some friction. And as you notice, we shot down 2 air balloons and all this kind of stuff going on with China and US. So that I think will put a damper on how far the market's going in 2023. So I just want to wrap it up. Few more things that I always end the sessions with is that stay abreast of your portfolio, look at your stock, look at your industry, and look at the overall market as well. You can always set alerts on your stocks. You've got to listen to some of the quarterly earnings reports. You've got to monitor your portfolio for winners and losers, make some adjustments if necessary. And the most important thing that I'm going to slide to the top of the screen next time is know yourself. Are you I can't sleep at night, nervous Nelly investor, or are you the type of investor that can handle an 8%, 10% drop in your stocks and you actually double down and maybe dollar cost average and buy more? What type of investor are you? It requires you to look in the mirror and know yourself. So please do some homework on yourself. And I always end by saying that learning is a journey. It is not a destination. You're never going to know everything. You're never going to learn it all. I'm still learning. I'm 59 years old, still learning. So continue to learn and educate yourself. It's not a destination. You're never going to get there. Okay. So lastly, if you'd like to book an appointment, please sign up, get a free 15-minute, no consultation, no pressure, no strings attached, free consultation, and have a happy 2023 investing. This is Coach Mike. I'll see you next month.